Hello, good morning. I welcome you to the morning meeting today on Friday, the 20th of April 2018. This is Jens Klatt speaking and exclusively presenting this format to you here for JFD Brokers as their global head of research and education. We want to have a look at the markets, how things are developing here. I can already tell you that the DAX is not presenting itself very spectacular. But in fact, we are getting to see some really choppy and unattractive price action. The question is, in fact, will this change at 11 p.m. GMT, so in around 1.5 hours? Why? Well, today is a small expiration in the DAX, and after this potential short squeeze, which was, let's call it hedge induced, so you had to hedge the short exposure here based on the position which was built in the options market. The market presents itself in fact really choppy sideways with a small drift on the downside towards the highs, which I made a topic here. That was 12,520 points. So I in fact saw the market dropping another 20 points, but all in all, it's no big surprise that the DAX can't really take on further momentum. So far it seems as if some market participants really want to stabilize the DAX below 12,600 points here till 11 p.m. GMT. Well, nevertheless, there's something very interesting happening right now, which I made a topic in the German version of the morning meeting. Let me just show you that before we start to have a look here at this. Probably we can use, we can't, since I already overwrote this. Let's have a look here at this picture. So right here, we are not talking about short calls anymore, but we are talking about short puts. And this is something really, let's say, strange, interesting, I don't know. 12,600 points. So why is that strange, respectively interesting? Well, it has to do with the fact that those options expire today at 11 p.m. GMT. And the interesting thing is that we're talking about short calls here. So this means that those market participants who just sold those puts here with a strike price at 12,600 points, they have to pay in the moment the DAX trades below 12,600 points at 11 p.m. GMT. So this is the settlement price. Every settlement price below 12,600 points results in those market participants holding those short puts here uncovered. Well, this is surely something we have to mention here, but they have to pay then, because the cash settlement means that all those who have bought this option here are allowed to sell the DAX at 12,600 points, which means they are earning a profit here of something like 40 points. So with this in mind, I said that probably it wouldn't be such a big surprise, let's say, if the DAX in this position is uncovered. It's something which is really important to mention here again, and that's why it's purely speculative. But that's one of the reasons why I could imagine the DAX to see a spike within the next 1.5 hours here up and above 12,600 points, induced by those market participants who want to see the DAX closing above 12,600 points. So in fact, that wouldn't come with such a big surprise. So far, it doesn't look like that, and probably it's completely wrong. But this is a very strange, very interesting, strange plus an interesting development. I to be honest, right now I'm a little excited to see whether this really happens or not, because again, what you can see here, those numbers, these are the numbers from yesterday. 8 p.m. GMT, so 10 p.m. German time, or 11, I don't know, but it doesn't matter. It's the data from Thursday evening, and the data from Thursday evening here means that this is what happened yesterday. And I think this is also something really interesting, something really strange. This is the volume which was traded here at this level yesterday. So if we go up here, you can see there's gehandelte Kontrakt. This is traded contracts, and I think this is quite a huge number here. at this level, which is perfectly illustrating. The same is true, by the way, for 12,600 points. It is perfectly illustrating that something's going on there, and probably the market is about to see another attack at 12,600 points. Nevertheless, again, we're talking about uncovered positions. It could also be that it's part of an option strategy like this one here, the Iron Condor, which has such a payout structure, and which is, for example, looking here at the looking that the market will probably stabilize here in between two. In between those two numbers, 12,500 to 12,600 points. That's also something which should be taken into account here, and which could be which could mean that we probably don't get to see big volatility at all. But all in all, nevertheless, again, it's interesting to just note that, and let's just see what happens within the next 1 to 1.5 hours. After that, things are getting interesting in terms of the US price action, US market price action. I mentioned this already yesterday. So the the Dow Jones had some trouble here around 24,900 points. Nevertheless, volatility is still very low, and external trigger events like the geopolitical tensions around Syria, or the trade war fears here between the US and China, they are somehow not playing such a big role anymore right now. And based on that, and if volatility keeps on dropping, well, there's a good chance that probably the Dow Jones probably drifts higher, which could then also lead to some drift on the upside in the DAX here, and a push above 12,600 points after the expiration. Yeah, all in all, why do I mention the long side? Why do I favor the long side? That's in fact very simple. First of all, it's market structure based, because we see a sequence of higher highs and higher lows. That's usually a sign that there's a clear uptrend on the hourly chart, which means I definitely favor the long side. We tested the highs here from last week on Friday, which is also a potential long trigger. And on top of that, I think that the risk reward on the upside is far more attractive than the one on the downside, because I see some very stable and solid support here around 12,480 to 12,500 points, which means that every break below 12,520 points has probably not that much potential. And that's one of the reasons why I definitely favor the long side, since I think if we make it above 12,600 points, there is definitely some room up to 12,800 points, and that has also something to do with the bigger picture. Very interesting, the fact that here around the current weekly highs, around 12,640, 650 points, there's a 200 simple moving average, which currently at least functions as a quite strong resistance here on the upside. Once we make it above that level, there is definitely some squeeze potential into the weekly close up to 12,800 points. Nevertheless, we definitely need the support from the US equity markets here. So could be that we have to be a little patient, even though, again, this interesting development here around the short puts and the open interest there probably gives us some action before 11 p.m. GMT, respectively US market opening at 1:30 p.m. GMT. Yeah, based on the fact that there's probably some squeeze happening then, or around the corner. Now let's have a look at the currency markets. There's also something very interesting developing. I'm definitely not referring to what happens here in the Euro USD. It's still choppy sideways, but what's far more interesting is what we get to see in pound sterling right now, and the real sell-off which took place from 5 p.m. GMT yesterday onwards. That was something, it came as a surprise in fact, and was induced by comments from Mark Carney. So let me just here show you something which I looked for you here. It's an article from Reuters from yesterday already, and it's BOE's Carney who dampens expectation for a May rate hike sees mixed data. So it was very interesting yesterday when Mark Carney mentioned here in a BBC News interview. I don't want to get too focused on the precise timing. It's more about the general path, and it's also that he said something different. Let's see. Yes, there it is. I'm sure there will be some difference of view, but it is a view we will take in early May at the next meeting of the bank's Monetary Policy Committee, conscious that there are other meetings over the course of this year. And why does this result in such a huge drop in pound sterling here, in this case against the US dollar? It's very simple. Therefore, let's remember what induced this push lower here on Wednesday already. That was the inflation data, which came in below expectation. Very interesting, because, and now let's remember a chart which I showed to you already at the beginning of this week, respectively on Wednesday, I think. It was here, it's a chart from John Kickleiter, and what he's showing here with those lines, in this case blue and in green here, those which are the highest. This is the Bank of England in green, and the blue one is the Fed, and it's showing the overnight index swap rates, and here the probability of a 25 basis point rate hike by mid-2018. And obviously what you can see here, that this chart is from Tuesday. What you can see is that it's a head-to-head race, obviously, between those two. And we know that the Fed is quite restrictive with their monetary policy, finding itself within a rate hike cycle. And so obviously market participants see the Bank of England to be very restrictive too, and expect her to at least rate hikes once. Or they have seen the BOE hiking rates once, till mid-2018, because this is an interesting thing. So that's the chart from Tuesday. On Wednesday, inflation data disappointed, still not resulting in a huge sell-off in pound sterling or in a huge drop in those expectations here, because we still, till yesterday, had a chance of 80% of a rate hike, and now it's down to 50-50. That's what I can tell you. And so the sell-off here results obviously out of the fact that market participants are now disappointed and see the market sees the expectations dropping like a stone that the Bank of England will hike rates here within then the next weeks at their next meeting in this case, because Mark Carney just mentioned that there are other meetings this year, meaning it doesn't necessarily mean that we have to hike rates here in May, but we can easily do this also in the second half of 2018. The market nevertheless expected it, and that was one of the reasons also why we saw a quite strong rally in pound sterling here, up and above the yearly highs, which were set at the end of January. And now, well, what does that mean? Currently, it looks like a double top, and it's confirmed once we drop below 139.70. If we drop below 39.70, there's further room down to minimum the March lows, which can be found around 137 here, this region around. So what I want to say by that is that currently the advantage in pound sterling against the US dollar in this case, especially if the sentiment extreme we can see in the US dollar index future, which I showed to you the days before, is unwind. In this case, there's a good chance that pound sterling sees some further weakness, meaning I think the best strategy currently is to sell the bounce. So meaning we should definitely have a look here at the region around 140.70. If we can make it above this high here, or the current intraday highs above the Asia range, make it back above this level and make it back above 41, there's probably further room on the upside, which could drive us higher to 41.70. But all in all, I think this is a region against which short engagements can be definitely considered. the picture would be brighter from a technical perspective if we can make it above 42.50, but after the comments and the latest data here from the United Kingdom, I don't think that these chances are very high. To be honest, I don't even see pound sterling correcting up to 41.70. I wouldn't be surprised if we see a clearer attack and aggressive sellers coming in once we retest this region around 40.70 here. Yeah, so that's it around pound sterling. Let's have a look here at dollar Japanese yen. Also very interesting. We are about to see another attack at the region around 107.80 to 108. If we make it above that level, there's definitely further room on the upside. Again, the unwind in the sentiment extreme could be could get a topic here quite soon. Very interesting. During Asian market hours, the market already attacked those highs here, then saw a pullback down to the breakout level, the highs from yesterday, and triggered long there. Now aiming for the daily highs again. If we make it above 107.80 to 108, then there's definitely a chance of further bullishness into the weekly close to come, and we have a quite solid good chance to close the week significantly above 108. And that's it on dollar Japanese yen. And let's have a final look at another currency, which is getting really interesting again, respectively was very interesting already over the last days here. It's the Canadian dollar. Today at 12:30 p.m. GMT, there will be a news released. It will be not only retail sales, but also the consumer price index, inflation data, which will be published. And they are expected to come in at 2.4% year on year here for the month of March. After the month of February showed the consumer price inflation rate of 2.2%. Interesting here, if this is if this data set disappoints, I think there's further room on the downside for Canadian dollar, and we could see some further or some acceleration here in dollar Canadian dollar, which could push us then up to 128 in the course of the next days. And after, on the 4-hour chart, this can be clearly seen after the structure falling highs and falling lows was broken here, thanks to a dovish interpreted Bank of Canada. Now, after the break, there was the retest. We didn't make it to new lows, but made new highs instead. And this is clearly bullish and could find, with inflation data coming in above expectation, could find another trigger for bullishness then in the weekly close. And probably we are then about to make our way up to 128, not necessarily today, but in the upcoming days, then in the upcoming week in this case. Yeah, and that's it from my end. I wish you all the best. Happy trading. Watch your stops, and talk to you again on Monday, 9:30 a.m. GMT. If you have any questions, please shoot me an email or contact me via Twitter. I'd really appreciate to answer your questions. And yeah, again, that's it from my end. So have a nice weekend. For the rest of the day, happy pipping, happy trading, and talk to you soon. Take care, see you, and bye-bye.